Hi everyone, let's go over my cycle, macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the cycle bullish scenario where we're looking for multiple 1-2s to the upside, now working on a blue wave 1, blue wave 2 and then continuation again towards the upside. What is interesting on the cycle is the trend, because each wave 2 starts to become a deeper retracement. The first wave 2 retraced to the 236, taken from the low to the high of 1, the second wave 2 to the 382, and the third one over here in green retraced to the 0.5. So we can expect the next wave 2 to retrace to the 0.5 or maybe even the golden pocket. At the same time, if we look at the wave 1s, then the wave 1s are becoming shorter and shorter and shorter. So basically what's happening is we have a trend like this, right? But at the same time, we also have a trend like this. So it's almost like merging together in some way till eventually you get a big wave 3 and you're going to move towards the upside. But you can see the yellow wave 1 here went to the 0.618 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, which is shorter than the red wave 1, because for the red wave 1, if the wave yellow was the same length as red wave 1, it should have hit the 1-to-1 trend-based fib extension, which it didn't. But then the green wave 1 hit the 0.618 compared to the yellow wave 1, as that trend-based fib extension is taken from the low to the high of wave 1 to the low of the yellow wave 2. So the wave 1s are getting shorter, and with this in mind, what I have done here is get an estimation of the target of the blue wave 1 between the 786 and the 05, which then gives you a price target between 72k and 176k. And then depending on the subwaves over here, we can of course get more accuracy, but that's something for the daily updates. What is also interesting is that preferably here, this wave 2 is already finished. If we look at the wave 2s of each bear market, basically, right, each retracement was like many tens of percent, like 50%, 60, 80%, which increases probabilities that all of these are wave 2s. The first wave 2 over here retraced like 80%. The second wave 2 here retraced almost also like 80%, and this one also almost retraced 80%. Now, an 80% retracement is not something that you get in a wave 4. That is very wave 2-ish behavior, which is the reason why the probabilities are higher for these lows to be wave 2s. But also, if we look at the wave 2s in particular, then the yellow wave 2 is a little bit shorter in time compared to the red wave 2. Because the 1-to-1 compared to the red wave 2 is over here, but the low of the yellow wave 2 was made just before. The green wave 2, however, is exactly the same length in time as the yellow wave 2. So that is quite nice, which then leaves us with the low over here and a move towards the upside. That is what you want to see in the bullish scenario. If we then compare the impulses in time as well, finally, to also get a time estimation for the high of the blue wave 1, for then another bear market to the downside, then what we're looking for here is this yellow wave 1 being shorter in time, as you can see, than the red wave 1, with the fib time taken from the low to the high of the red wave 1 to the low of 2. And you can see the high was made around the 786. So it's a shorter time impulse, the yellow one, compared to the red one. Now the green wave 1 is exactly on the month the same time as the yellow wave 1, which is nice, but that means the green wave 1 is still shorter than the red wave 1. Now if we then think about the blue wave 1, we are then of course thinking about either the 1-to-1 again, meaning the blue wave 1 will be the same length in time as the green wave 1, or potentially a little bit shorter again, right? Which then leaves us with a little bit of an estimate over here in time, with the 1-to-1 sitting in October 2025, the 786 is sitting in March 2025, and the 0.618 is sitting in September 2024. If we then finally compare the current start of a potential bull market with the starts of previous bull markets, as you can see over here, these are simply bar patterns from previous starts of the bull market, then you can get a bit of an estimation how we're doing in comparison to old data, right? Previous starts of bull markets. This one over here from the old age, basically. If I put this on top of the current price, as you can see, then we are right around the same price as expected based on this bars pattern, which is nice, of course. And if we then also look at the other one, which includes the COVID dump, right, this wick to the downside, then if I put this on top of the low, then you can also see over here we are pretty much at the same price area in comparison to previous bull markets, which is exactly what you like to see. The invalidation for this scenario for me would be taking the low of this wave 2 over here at 3.1k. Now if we then go to the macro scenario, which is basically zooming in to this piece of the chart over here, then in a bit more detail, after the low here of the bear market, we're looking for a wave 1, 2, 3, 4, 5, which then finishes that green one. And then in wave 2, the correction is finished, and then a WXYXZ, which is a rare corrective pattern, gotta say, but you can see just missed out on the 0.5, that's okay, right? For a wave 2, that's fine. It also finished just before the 0.382 fib time, taken from the low to the high of wave 1. Not as common, however, it's more like something to look for in the lower time frames. On the higher time frames, time can differ a little bit, so that's okay. But for the bullish scenario, you want this to be the low and continuation to the upside. If we then zoom in to the daily, and have a look at where we are at the moment over here with this latest move towards the upside from 15.4k to where we are now, we are then looking for an impulse to the upside in a wave 1, 3-wave corrective structure in a running flat for wave 2, hitting the 0.382 Fibonacci taken from the low to the high of 1, which is less common for a wave 2, but a target nonetheless. And then we are looking for a blue wave 1 to the upside. And this is important, because of course eventually we're looking for the green wave 3, but inside a wave 3, with wave 3 usually being the most impulsive, strongest, most parabolic wave to the upside, inside wave 3 you want to count a 3-wave structure. Now for a wave 3, the minimum target usually is the 1.618, but it can be very, very extended. And if we think about the time frame we're working on, preferably of course, this wave 3 is going to extend by a lot, especially if you want to reach target of like 100k, right? And 50k is not enough for a wave 3, because if this would be the end of 3 and you get a 4, then yeah, wave 5 might reach like 60, 69, 70k, you know, but that's not eventually like the 100k area, of course. So what we're looking for in the bullish scenario is a 5-wave structure in wave 3, which is common, a nice structure that you can count. Same over here in this impulse in wave 1, where we could also count a nice 5-wave structure to the upside. In this scenario, we're then looking for the blue wave 1. 1, 2, eventually 3, 4, 5, waiting for the blue wave 1 to finish, for then a deeper retracement to the downside for the blue wave 2, before then continuation to the upside. Of course, the invalidation would be price going lower than this wave 2 over here at 27 or at 24.7k. And the most common target for wave 2, if this wave 2 manages to move to the point of control, which we have just above, if this wave 1 moves to the point of control above, and imagine this is then the high of wave 1, depends a little bit on local market structure, because we do have a scenario that says 1, 2, 3, 4, 5, and then you get the retracement, right? But an estimation of wave 2 at the moment would be between over here the 786 and the 0.5. That is the most common target, which then would be, if price hits the point of control, between 31.9k and 27.8k. And what is also interesting with that area of interest for a wave 2 is this previous range volume profile, this one over here. Now the one below is an example, because this was a volume profile of this range, and you can see price retraced to the value area high once, value area high twice, acted as support 2 times for then liftoff. So that is why I think it is important to show you this volume profile over here, which is in confluence. The value area high of this volume profile has very nice confluence with this zone for a wave 2 over here. And also, if we're looking for a wave 2, you can see there is not much market structure in this area over here. Yes, you can have a support resistance flip around the 0.5, right, where you have resistance, resistance, eventually support, so that is interesting, but there's not too much structure with this latest move towards the upside. So what goes up quick can also come down quick, which then means you can go to the value area high, find support around the golden pocket, value area high, bit of an order block here as well, for then a move towards the upside for a wave 3 of 3. And that should be the move, right? That should be the most impulsive move towards the upside. If you then again zoom out to the higher time frames, first over here, make sure this is set correctly. And then we go to the cycle chart once more, where I now want to show you the bearish scenario. Then in the bearish scenario, we are still looking for a move towards the downside in a multi-year bear market. So here we are looking for wave 1, wave 2, 3, 4, 5. 5 waves are finished. 1.618 is a target for a wave 5 pulled from the high of 3 to the low of 4, so that's nice. And then now we're looking for a 3-wave structure. 1, 2, 3, right? So we have wave A, wave B, looking for C. Now for a wave 2 on the lower time frames, it's more common to reach the 05 to the 786. But on the higher time frames, things don't really work that way, right? Because the 05 is at like $400 and the 786 is at $20, imagine, right? So the 0.236 for me is a maximum target for this wave 2. Just like we saw on the very high time frame where this low was made around the 0.236 taken from the low to the high of 1, I expect the same over here. I don't expect the 302 to be hit. I then expect the 236 to maybe be hit, right? With the 236 sitting at 6.1k for then a retracement to the downside ending somewhere around that 382, 236. I mean, not the 236, more closely to the 382 really, which is a fib time taken from the beginning to the high over here, which is sitting at around September 25. The 236, I do have it on my chart, but not that common for a wave 2, is sitting in April 2024, but eventually we're looking for a move towards the upside. If we then zoom in to the bearish scenario over here, right, for another low to the downside, then we have to look at this scenario here. So here's the red wave 1 again, right, like on the cycle chart, the red wave 1, and then we're looking for a 3-wave structure to the downside to finish the red wave 2. In this scenario, we have a 5-wave move finished, looking for an ABC 5-3-5-wave move to the downside for then continuation to the upside. Now in this scenario, more locally, we're then working on this wave B to the upside in yellow, where we're looking for a 3-wave ABC in green to the upside. Important resistance is what we are approaching right now, the golden pocket taken from the all-time high to the low, and the 786. The golden pocket is in confluence with this multi-year point of control at 38.7, right? And the 786 is in confluence with the value area high of this multi-year volume profile at around 48 to 50k. So these areas of resistance are incredibly important indeed, with again point of control 38.7 to the 66 is 48 or 41.7k, 786 sitting at 50k, value area high at 48k, right? So important resistance indeed for price, for then the high of a wave C and a move towards the downside, where if we look at a move towards the downside, then this golden pocket is very interesting indeed. This golden pocket is taken from the low to the all-time high, and again a multi-year volume profile. The value area high of this multi-year volume profile is right going through the golden pocket, as you can see, at 9.7k. So this would be the area of support for a wave C, which is basically between like 10-11k and 8 to 9k, right? This is the area of interest for then a continuation to the upside. Of course, more locally, we have a very big support resistance area. If price loses this support resistance area, which is sitting between 28.7 and 32.9k, of course that wouldn't be good for the bullish scenario in a 1-2-1-2 continuation, and then bearish probabilities become of course higher. Now if we then go to the daily and we look at the bearish scenario, then here we are looking for a 3-wave structure to the upside. Wave A is finished. Wave B is the same, right? So the same as 1, 2, exactly the same 382 hits, which is more common for a wave B, however. And then for a wave C to the upside, we're also looking for an impulse to the upside where the target of C is between the 1 and the 1.236, taken from the low to the high to the low over here, which gives you a target between 40.4k and 44k, which is in nice confluence with that golden pocket as well, and just above that high time frame point of control. So very, very important resistance indeed. Nice area. You can also see I have a fib time on the chart taken from the beginning to the high of A to then the low of B to compare the time of A with the potential time of C. Usually A and C have a little bit of a time relationship as well, which most commonly is around the 1-to-1, but the 0.618 and the 1.618 are also respectable targets, and the 0.618 is sitting at the 9th of December this year, the 1-to-1 on the 2nd of February next year, 2024, and the 1.618 is sitting on the 1st of May 2024. So that would be the target area for a wave C. And then depending on the reaction that we get towards the downside, we can then estimate the probabilities of continuing to the downside or of course continuation to the upside. Now if we then finally look at the probabilities of the different scenarios, then currently on the cycle probabilities are higher for the bullish scenario. However, the high time frame and lower time frame counts that I produce in the daily updates, right? These are the counts that will give us more guidance of probabilities locally, because eventually the lower time frame Elliott Wave counts and scenarios will decide what happens on the higher time frame. But at the moment, we are in a bullish market structure locally, right? There's no reason yet to think we are going down once more unless we start to see signs of weakness and big changes. So that is the reason for the probabilities. If we then look at the probabilities over here on this chart, then regarding the macro scenarios, basically it's equal because we're looking for the 40-50K, right? Like, of course, on the cycle, the bullish scenario is important, but on the macro, for both of the scenarios, we are looking for price to still move up to the 40 to 50K area, both for the macro in an A, B, C, and then down, as well as for the bullish, for the bearish, macro bearish scenario, of course. And also for the macro bullish scenario, we're looking for a 1, 2, 1, 2, and then continuation to the upside. So also on the high time frame at the moment, the bullish scenario has the highest probability scenario. It is the highest, and then a wave 1, 2, looking for another 1, another 2, continuation to the upside. But in the daily updates, I will provide you with everything you have to know and the probabilities of what is happening locally. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which in my opinion is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.